Welcome to the StockOptionAssassin.com's Trade of the Week video. My name is Eric. Today is Thursday, November 13th, 2014. And today we're going to look at gold, the ETF. We're looking at the GLD. And I want to talk a little bit about what's happening in case you're not aware of this. Most people are aware by now. But essentially, gold has been in this downtrend, and which is sort of an inverse relationship to the US dollar. We're going to look at UUP. So the dollar is in an uptrend and gold is in a downtrend. And the reason why is because as the dollar appreciates, you're able to buy more things with dollars, and gold, oil, commodities in general tend to be going down. So what we're going to look at is I've been getting a lot of questions. What do we think about gold here? Do we think gold is trying to put in a bottoming pattern, or do we think we're just about to continue the downtrend? I think that we're going to continue this downtrend, and there's a couple reasons why. And first thing, just technically, if you forget about the currency correlation or inverse correlation with the dollar, if you will, with gold, just technically we broke a new low. We're making still lower lows, lower highs, that kind of thing. We broke down here. We're retracing back up. Tried to get past the gap window here. We couldn't do that. And our indicators are telling us that it's still very bearish. We're below zero. We're near the zero line here on our DMI oscillator, which is telling us that this is a pretty good resistance point. And then our short-term DMI stochastic extreme indicator is very, very overbought. And you can see the last time this happened, we were overbought. We stayed overbought for a little bit, but ultimately this thing ended up rolling over and dying. So we're in a place where just technically, I think that you could pick up some gold puts. We have the December 110s looking for this to kind of break down. So we have kind of this bear flag going on. So there's a lot of just things happening with gold in general, just technically telling us that this is a short trade. On the flip side, if we take a look at the dollar has actually rested a little bit. So in the last week or so, gold sort of, I'm using air quotes here, potentially found a bottom, but look what the dollar's doing. The dollar is this is a beautiful bull flag. We're pulling back. This is going to be support. We're oversold here, right, on our short-term indicator. When this ticks back up, our DMI stochastic extreme, that tells us the momentum, and the oscillator, when they both kind of tick back up, is telling the momentum is getting back in favor of the bulls here. And if and when the dollar does rally and break out, I think gold's going to make a new low. How low it's going to go, I'm not really sure, but you can see, obviously the dollar is kind of in this huge uptrend. If we zoom out on the dollar a little bit, let's go to like a monthly chart. And I'm using UUP, but this level, we have another level that we're kind of right at, right? So we're right below that, which is 23.5. But previously this level was a pretty good resistance, about 23, and we've actually cleared that. And what this is telling me is that this is a huge base for the dollar. And if Europe and the Japanese continue to print their money, the euros and yen, that will sort of exacerbate this move. And I think the dollar is ultimately going to go higher, which is ultimately going to send gold lower. So that is our trade of the week. We are trading puts on gold, and we are looking for the next move lower. Now, I'm using these indicators more for entry and exit techniques. We know that the Fed has stopped printing money, so I think the dollar kind of currency trade, I think it's going to go further, and I think gold's going to go lower. So hopefully that makes sense. Hope you enjoyed this update. We'll see you guys next week.